Recording in progress.
Happy Thursday. Welcome, everyone, to the final edition of Ninjacators' new weekly live event, Profits at Noon. We've opened it up just a minute early, as always, to let some of our favorite people get in, get the best seats. Hal, welcome. Always great to see you. Theo, I hope you guys are having a great week. Looking forward to a nice weekend. Nab, welcome. If you're joining us over on YouTube, I'd like to welcome you as well. Please check that description for a link to join us here in Zoom. We're going to get started in just a minute. Oh, sorry, Richard.
No worries. Just saying hello.
I don't leave you a lot of room, you know. It's my fault.
No worries. I was waiting for a gap there.
Sure. I try to avoid the gaps, you know, so that's
all good, all good.
Excellent. We're going to get started in just a minute here. Hi, Hal. Where's the rest of our usual suspects? Maybe we'll wait a minute, see if they've got something else going on. Awesome. Well, I will note very quickly here that we do have a special guest coming back into the house today. Those of you who are with us on Monday, you got to see Craig Hill jump in and do a guest host for Richard. Craig is going to be in the house today, just showing off some of his Robot Lab portfolios, and as well as bringing a link to the table for a special event they're holding this Saturday. So we'll have some more details on that coming up here. So Craig should be jumping in a few. Actually, I see Craig is here. So we're a minute after the hour. We're going to go ahead and start firing things up. Still looking for a few of our other usual suspects. So I'll keep an eye on the attendees here. But as always, feel free to fire away in the chat throughout. If you have any questions for us today, we'll be more than happy to help. So again, this is the Thursday edition of Profits at Noon. We are live 3 days a week, Monday, Wednesday, and Thursday at noon Eastern time. We're going to show you our levels to lock here today, and as mentioned yesterday, we have some movements, some updates happening for our levels to lock newsletter that will accompany these sessions. Very excited for all of you to get your hands on that. And just a quick reminder that those levels, that newsletter, will go out bright and early in the AM, so you'll be armed with those levels hours before we even come into this live session. So it's going to be a great component to supplement everything we're doing here. Very excited, hoping to have some good updates for you next week on that front. Welcome, Joseph. I see you just joined us. Excellent. So in just a second here, I'm going to pass the reins to our co-host, Richard Krugel. My name is Nate, for those of you that are new to these sessions. And I will be back for some Q&A here later, and as well as we bring in our special guest, Craig Hill. But for now, we're going to pass the reins over to Richard Krugel. He's going to get started with today's analysis and our levels to lock. And then we'll check in with Craig. Richard, to you, sir.
Thanks very much, Nate, and welcome everyone. Thanks for attending again. All right, so I'm just going to go over the markets. Obviously, not much has changed since yesterday, but once I'm done with that, I'll hand things over to Craig. Before we get going with the actual analysis, just a quick note that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. Right, I'm just going to disappear off screen quickly, get my ducks in a row with all these other screens I got open here, and I'll be back if you guys got any questions. Right, quick recap here on the ES. I think even earlier on, when was it, Monday, when Craig helped me out with me being absent, we were looking at this zone previously here from where we had a decline, expecting or did expect that it'd probably just be corrective in nature, and that this entire move to the upside potentially could be some sort of a leading diagonal or a larger sort of uptrend still in its early phases. Now it's been going upwards since when was it, about the 13th of March. So, you know, we haven't had any real big pullbacks at the moment, or just yet. So I'm still sticking to the bullish side of things. We did get a reaction lower from this upper channel line over here, also at 100% extension from this measured move. We have this first sequence to the upside, second sequence to the downside, third sequence. And at that stage, I was also saying that we potentially only had a 3-wave move into that area. And that if we did get a correction, we might get another move to the upside. We got that earlier this week, just popped that high, and then we've had a decline. Extremely difficult trading conditions, that's for sure, especially when you start forecasting things here. You get these very strong moves to the upsides, very strong reversals back to the downside. So in the bigger picture, I'm just going to stick with the bullish buys for now, and then also to obviously keep a keen eye on our levels to lock. So still bullish in the bigger picture, still think that we are due for a little bit of a pullback at some stage. But when that's going to happen, we'll obviously have to wait and see. In any case, price has been sort of trading a little bit below today's pivot point at 4,136. And as just now on this current 4-hour candle broken above it and potentially heading back to today's, well, not back, hasn't reached it yet, today's R1. And we also have a projected range high around about the 4,157 to 58 sort of level. And we also have the center channel line here. So if price would move into that, that could potentially act as resistance. But again, if we see a 4-hour bar actually open, 4-hour candle, or maybe even on the daily, close above the center channel line, then it leaves much more space to the upside, potentially back again to this upper channel line. All right, so not much has changed since yesterday. Like I mentioned, still bullish in the bigger picture, but also just note that I do have a plan B in case this entire move here was potentially just corrective in nature, rather than actually a leading diagonal, like I've mentioned. But for that to really start, making sense, we really need to start seeing strong declines to the downside. Even if that happens, we'll have to keep track of things and potentially change from our bullish buys to bearish buys. But that hasn't happened. Every sort of pullbacks immediately met by buying pressure again. So just note that we could potentially see resistance step in around about the 4,157 to where that center channel line is currently around about 4,164. And then it's all about a matter of fact of watching how these candles close. A strong close and move above that could potentially send us higher, maybe tomorrow or even into next week. Right, NQ, was saying yesterday and the day before, sorry, only yesterday because I wasn't here on Monday, that price is potentially gunning for this lower median line. We also had a projected low deviation to around about where price actually found support yesterday, 12,945. Also at this lower median line, it had a little bit of underthrow below that line, but since it's been closing above it again, went above today's pivot point at 13,045, and it's just reached R1 and also our projected range high at 13,146, which might act as resistance. Temporarily that might be, but this might have all just been corrective in nature, with price potentially gunning back for these highs that was set earlier in April. Right, and that brings me to the YM. Different price structure. Although price came really close to this upper red warning line, we were looking at an area there. We also had earlier this month an area, I think it was, what was it, a projected range. The price sort of just touched it and moved lower again. It actually found support at this median line. So it was sort of a retest and a bounce from it again. And again, same thing, the ES and the NQ heading back upwards again. Also opened below today's pivot point at 33,888. Just fell short of today's R1 at 34,022, and we also got a projected range high at 34,044 plus minus. I do think that this does look like the YM's also heading towards new highs, but I'll be careful if price were to hit this upper red warning line again, that might act as resistance. If we see a strong break above that, it will obviously just prove will add more credence to the idea that we're in a larger bullish trend rather than correction. All right, and then we have the Russell. Again, Russell, not one of my favorite markets to trade, especially after price sort of hit these lows here in the beginning of March. It sort of grinded lower, straight up, straight down. It's like I said this yesterday, good luck trying this as a swing trader. It's just like nonsensical. Price moves up, V-shaped top, V-shaped bottoms, and moved into a low here on the 24th of March, and then started another move back up again. Now, this recent high that we've seen here didn't actually take out these highs. It was set on, this is on 3rd of April, but still does look bullish here for the Russell. Not really a fan of this pitchfork setting here at the moment. Even if I go towards using a standard pitchfork, you'll see that price not even respecting that at the moment. So might have to redraw that and potentially do this instead. Just give me 1 second while I actually do that. And use this low. You can see that this is a very, very strong slope on that pitchfork. So I'm going to go to my go-to setting, which is the shift. And yeah, we got a pretty decent working pitchfork, or the angles at least. We can see that price is sort of using those 3 anchor points. Been finding support at this lower median line a few times, although it went a little bit under. It went actually a little bit above the center median line over here. Moved lower, and it's now gunning for it again. So we got today's R1 around about 1,809 plus minus, and today's projected range high at 1,814. So that could also be an area where we potentially could see resistance on the Russell. Also, just we have that sort of, let's say, confluence between these levels to lock as well as the center median line, all like falling together within that zone there. So again, it's all about watching price action, how it interacts with these levels to lock, as well as looking at a bit of price structure and how price also closes in relation to these median lines. We get a nice strong close above here, we might see the Russell gun for these highs that were set earlier in April. Right, and this brings me to gold. And I've had a question from one of you guys yesterday that if we see more weakness in the dollar index, wouldn't that mean that gold will continue higher? And I did say, yeah, that's absolutely true. However, I did expect some sort of a correction, but I have to eat my words here a little bit as well. Gold looking extremely strong for me at the moment. And we did look at this triangle formation earlier. When was this? Like towards the end of March. And correctly identified that. Now, we had another move back to the upside. Now, what I'm seeing currently, and I was saying that this could potentially be, or was, the end of a 5th wave, meaning that we could then be, or potentially see some sort of a deep decline with another move to follow to the upside. But in the overall picture, still being bullish, right? Now, this doesn't look like a 5th wave anymore, does it? Because now price obviously breached that previous higher again, and it's done that in a 3-wave sequence. All right, so this could either mean one of 2 things, is that price is just building its way in a very strong upwards trend to the upside, or we're getting some sort of, I don't know, expanded flat that might unfold, but that just doesn't look like it fits really nice with the analysis. So I don't know if you guys been trading commodities for a very long time. It's not unusual to see 5th waves in commodities that actually extend, or actually are the longest waves in a sequence. In this case, like Elliott wave analysis will teach you, normally your 3rd wave is your longest, but quite often you do get 5th waves that are actually longer than 3rd waves in the commodity markets. It's quite a, how can we say, a regular occurrence, if that makes sense. So still thinking that this was a 4th wave, and this is just looking at the sequence to the upside here that started at the end of Feb, potentially a 1, a 2, a 3, a 4, a 5, and then still expecting some sort of a correction at some stage, unless we're going to get that extension to the upside. Now, I've also got a bigger picture view here on gold. And I've actually been talking about this when we had the morning bell that I hosted you with Ninjacators previously. And we were sort of tracking this entire mess that started here in 2020, in August. And I've been saying for a while that I was viewing this as corrective, although to be dead honest, it was a massive amount of zigzags up and down, up and down. So really difficult to figure out what that was. But we were sort of looking at the idea that what we've seen here was potentially an expanded flat. Now, what that means is, let's say you get a trend to the upside, you then get a three-wave move downwards, you get a three-wave move up, and your three-wave move to the upside just manages to fall in line with the start of that correction. Sometimes it just pips it, and then you get a strong five-wave decline to the downside, and that actually completes the entire correction. And then you get another move to the upside. Now, I've been saying this for a while, but again, very messy. A three-wave move actually traced out, I think, as a double zigzag for an A. And just to make things even more complicated, the B wave that moved upwards was an A, a triangle B, and a C for a B wave there. That nearly came, you know, sort of pipped almost these highs, but fell in line with where this, I think, still correction ended or started from. And then we had this five-wave decline to the downside, potentially ending that C wave. Now, if this is true, and I've been sort of saying this for a while, that would mean that the next move to the upside should then take out these highs that were set in, what was it, August 2020. Now, the other thing to consider here is that we're going to have to expect a five-wave move. If this was a five-wave move, and let's say this was a second wave, then this is one hell of a first wave to the upside. Meaning that if all of this obviously works out, that if we're going to see a third wave to the upside, we could even see extensions to 123, 138.2, 161.8 to potentially give us a third wave, then a fourth wave, and then that five wave, and then get a larger correction to the downside. So yeah, a little bit maybe far out to forecast this, but always nice to see in the bigger picture, in my mind at least, what could have happened and what might be happening at the moment. And if you remember, we looked at this sequence over here, this one we have over here, as potentially being this sequence here. So, you know, if this is building up as part of a third wave, then we potentially had that one, a two, then a one of a third, two of a third, three of a third, four of a third, five of a third, if that makes sense. So extremely bullish in my opinion. So yeah, although a correction is still possible at any time, we have to expect any of this sort of behavior correction can unfold at any time. But it might just be short pullbacks with gold just still basically rocketing to the upside. Right, so that's my view on gold, also looking at the bigger picture, which I haven't shown before. And then we're sitting here with crude. Now, after that huge spike that we've seen here at the beginning of April, when the Saudis decided that they're going to reduce production, I've been counting this as a one or two, that spike either being as a third wave with whatever this was, a fourth and then a fifth wave, but recently updated that to this potentially being a third wave, with the fourth wave decline potentially following at some stage with another fifth wave to the upside, then correcting and then move back upwards again. So prices reach this upper median, warning line as I call it, and it's just been moved above it a little bit and since now been trying to move lower again. Been above today's pivot point for most of the day during the overnight session, failed to reach today's R1 at 84.10. If we do get a close below today's pivot point, we might see a move here towards S1 at 81.85. It also falls in line with this angular, which could actually act as support, a median line. I call this a dashed median line, where price might move towards. We do get a close below that on a 4-hour, we might actually see the projected range lows and the deviations thereof being taken out. Now, probably, I wouldn't say today, but maybe tomorrow, unless price obviously shoots back up to the upside. And this is obviously, again, during conditions like these where the markets are quite difficult to make sense of, especially when they moving up and down really fast, potentially not crude all that much. But when we do actually have this newsletter ready with these levels to lock, then at least we have an intraday game plan to sort of figure out where price could move towards, have targets, and et cetera, to help you guys out with that. And that's pretty much the analysis. Again, not much has really changed since yesterday. And we'll have to just recap things back on Monday again. Not sure how tomorrow is going to unfold. But yeah, that's pretty much it from my side. If you guys got any questions, please let me know. And if not, then I'll just hand the reins over to Craig, and then you can do his thing.
Sure thing. Well, very much appreciated as always, Richard. I know everybody here, we have quite a rabid group that's coming together here, and we really enjoy spending that time with you, and we all appreciate and enjoy this in-depth analysis as always. So thank you so much. Everybody that's here joining us in Zoom, or if you're over on YouTube, please feel free to fire away. If you have any questions on these levels, on the analysis, the newsletter that's coming around the corner, we'll be happy to discuss that with you. Of course, we do have our very own Craig Hill, the man, the myth, the legend, waiting in the wings here. So if we don't have anything coming through the chat in just a second, we're going to go ahead and pass the reins to him. He has some very cool stuff to show you, some of his favorite Robot Lab portfolios, as well as a special event we're having this Saturday, and everyone will, of course, be invited. So it looks like we don't have any questions coming through at the moment. So Mr. Craig, if you're prepared, if you're locked and loaded, we'll go ahead and bring you in and let you take the reins for the rest of the session, and of course make some room for Q&A at the end.
Yeah, awesome. I am, and I got some big shoes to fill. I don't know, the man, the myth, the legend. I mean, I think the guy who went my predecessor who went before me is the man, the myth, the legend.
Well, he calls us all that.
I'm the lucky one that gets to hang out with the legends. So
cool.
But yeah, it was great to see that move in crude. I had mentioned on Monday, crude had just compressed, right? And markets, right, Richard? I mean, we go from compression to expansion and whatnot.
Yep.
And I had said on Monday, look for a move in crude. And sure enough, Monday afternoon it hit, and then it followed through on Tuesday. That was awesome to see. So
yeah,
love to see.
Hope some of you guys took advantage of it. So yeah, I'm ready. Let me share my screen.
Cool, sure thing. Well, I'll get out of your hair. And yeah, welcome back, Craig. Thank you as well for coming back and joining us again this week. We're all really excited.
All right. Well, yeah. Well, thanks for having me, Nathan and Richard. So again, thanks for the intro and allowing me to join you guys today to share something with everyone in here. We're gonna have on Saturday morning. Okay, but before I get started, you know what? I was here, so I know Rich already went through this, so I'm not going to go through this. You guys have seen it, but I'll just jump right into it. If you guys really like what Richard's doing, what we talked about on Monday in here as well, in addition to what we're doing in here and the trades that we're going over in here and the opportunities, even in addition to your own discretionary trading, guys, we've got the perfect thing that will help you scale it. Okay. And we call it Robot Lab, and it allows you to take everything that you're learning from Profits at Noon and scale it. So Saturday morning, 10 a.m., I'd like to invite you guys to a free live masterclass where you'll learn a uniquely proven way that you can use fully automated day trading systems to go from zero to full-time trading, or if you're already trading full-time, right, to create another stream of income for yourself. Okay, I'll be there. I'm not presenting. The presenter is the guy that is the architect behind Robot Lab. His name is Christian. And before I show you my automated strategies or bot portfolio, I just thought I'd take a few minutes, give you a sneak peek of what you're going to see on Saturday. It's about a 60 to 75 minute presentation, and we'll save some time for Q&A at the end. Okay, so here's what Chris is going to talk about. Oh, real quick, by the way, you'll actually get a free robot, and we've updated it. So we've updated the robot. It's a newer one. It's a free robot. If you want one just for coming, then join us on Saturday. But what Chris is going to talk about is our backwardation certainty secret and what that even means. Okay, so this way you'll know what to expect from an automated trading system. And so this way that you can develop trust in the system. so that you continue trading it for the long term, right? Trust is important. He'll show you how to slash risk. Okay, risk is a huge issue for myself, and in speaking with other traders, drawdowns are a huge issue, right? Especially if you have a small account. He'll show you how to create a portfolio of bots, and we have some pre-made bots as well that minimize drawdowns and maximize profits. In fact, within the next few slides, guys, I want to show you a portfolio that I created that's made up of 17 bots. It's diversified, low correlation among all the bots, and honestly, that's the key to minimizing drawdowns, right? So Christian will also discuss with you the #1 automated day trading system mistake that traders make, and he'll show you how to avoid it. This is something that I've actually had to learn the hard way. Okay, and finally, he'll show you a 0 to full-time income trading action plan. So you'll learn a step-by-step plan for scaling your portfolio of bots as you build your account over time. And of course, at the end of the webinar, we'll save some time for Q&A so that Christian can get all of your questions answered. All right. I don't want to bore you with any more details here. Christian will go over those later in Saturday's class. Okay. But now about that portfolio that I was talking about. The last time I was in here, I think it was March 14th, I presented a portfolio, actually the same portfolio, with the total net profit right around 99K and the maximum drawdown right around 2100 or so, I think it was. But this is the same portfolio, but now we've position sized it. Okay, it's position sized. And the dates here are through April 1st. Okay, so take a look at these performance metrics. It went by increasing the position size, we have roughly about the same amount of drawdown in here, but on a select handful of bots, and those bots minimize drawdowns, I was able to increase the total net profit by about $8,000 to $10,000. And the percent profitable is about the same. The profit factor is up a little bit. But just to show you, this is actually a position sized, and there's just, out of the 17 bots, only 4 bots are position sized. Those bots with the least amount of drawdown are position sized with 2 and 3 contracts. All the other bots are just 1 micro contract. But what I wanted to point out in here is look at the total net profit, right? 109 compared to the drawdown of literally just under 2K. Okay, again, this portfolio is about a 50% winning percentage with a profit factor of almost 2 to 1. Okay, and this isn't discretionary. Okay, these are fully automated strategies. And look at this. This is the historical monthly net profit distribution of this portfolio. It shows you how it's performed and gives you an idea of what to expect each month. And look at this. I mean, only 3, maybe 4, right? Losing months out of 47. Okay, along with, and there's a few break-even months in here, right? The largest losing month was actually in April of 2021. And then most recently, look at February. We had a losing month just this past February. But what I want to point out is, look at the months prior to April of 2021, right? It may have lost some, maybe right around $1,800 to $1,000, but the month prior it made $5,000, right? And then the month following, within 2 months, at the end of the quarter, you were back up, okay, making new equity highs again. And look at most recently in February this past year, while all the other portfolios that were made up of mostly E-mini S&P and NASDAQ 100 bots, they took a larger hit in February. If you had started trading this portfolio on January 1 with 10K, you'd still be profitable. Notice that in January, right here, let me get a little pen, right? This is January, okay? This is February, and this is March. Notice that January and February pretty much a wash. At the end of February, you were down a little bit, but then you can see at the end of March, you're back up making new equity highs again. So I just wanted to point this out that, hey, there are losing months occasionally, right? But you can see that the winning months, the gains are 2, 3, 4 times, if not even 5 times. And back when COVID hit, 12 times, right? The average losing month. So, and the average, the number of losing months is significantly less than we're talking what, 5-6%. So, guys, this is just one of the portfolios that I've created for a 10,000 plus starting account. In this portfolio, we're using optimized bots across different futures contracts, and we only trade those bots with the least amount of correlation. Okay, so see how the bright green in the correlation matrix above, and the correlation matrix below, you've got red in here. Okay, so for example, like early birdie and back from the future are highly correlated. So you wouldn't trade both of those in the same portfolio. You would pick one, right? Same thing here, early birdie, back from the future, see how they're correlated? And then meme squeezer and steady eddy are correlated. So you wouldn't trade both of those, okay? And you'll see that I've done the research and I've looked at return to drawdown ratios and everything. And early birdie and steady eddy are the bots to go with. And they're in this portfolio, I believe. They should be. I'm pretty sure they are. So what I wanted to point out is that is the fact of how important it is to consider how correlated bots, whether or not bots are highly correlated or not. Now, on good days, if you're trading correlated bots, you can really make out in the market. But on days where they get stopped out, it's like volatility, right? Trading highly correlated bots it's double-edged sword. It's like volatility. You'll see more a volatile equity curve. But when you diversify and you optimize the bots, which I've done, so you don't have to do that, and you look at low correlation, okay, it minimizes risk, right? It provides you with a higher return to drawdown ratio and a much smoother and consistent equity curve. All right, so you will learn some of this in Saturday's class. And as you can see here, again, you're going to have winning days and losing days. There's no way around it. Sometimes you might even have a set of consecutive winning days and consecutive losing days, obviously resulting in some losing weeks, just like any profitable strategy. But notice that we've got a whole lot more winning weeks than losing weeks. And you can see that the gains on the winning weeks far at least 2-3 times the biggest losing weeks in here. Okay, so take a look at this monthly net profit distribution. Okay, this is again over the last 4 years. You only have 3 losing months. Okay, and like I said before, those losing months were roughly between $500 and $1,000. This is again trading micros, with the months prior exceeding gains 3 to 5 times that, right? In fact, guys, the average profit for this portfolio is right in here at right around 2,300. Okay, so in fact, I'm encouraging folks that become members of Verbal Lab. This is the portfolio to go with right now. The bots that make up this portfolio, obviously, they've got positive expectancy, right? Long-term results speak for themselves. We've got a steady, stable equity curve, right? Minimizes drawdowns. Notice, I want to point something out in here. It doesn't really pull back, right? You've got moving it up. Notice how instead of pulling back, it just kind of goes sideways for a while, right? We go sideways here, up, sideways, up. Now there's a little stretch here where you go, but you're not seeing like a major correction and then follow through. right? There's a little bit of a correction, but for the most part, right? Sideways to down a little bit, back up, right? Up. And lately we've been going sideways. So it looks like we're getting ready to pick back up again. Okay. So this is actually good for you guys to be able to jump on board this. So the key here is just letting the portfolio run. Okay. And how easy is it? It literally only takes a few minutes each week to enable the bots and check on them in the morning, before the market opens, and then again in the afternoon after the market closes. So I typically, I'll turn them on Sunday, and then I'll leave them running the entire week until Friday. Okay. Now for some of you, an average of just over 2.3K a month may not seem like a lot of money. Okay. For most of you, I mean, be sure you'd be fine with an extra $2,300, right? And some of you might be ecstatic about it. I mean, for the most part, if you're modest, it's going to cover your mortgage and a car payment, if not 2 car payments, right? But guys, it only takes a few minutes each day. Okay. So you don't have to spend hours in front of the computer. Okay. Again, this is trading only 1 micro contract on 13 bots. Okay. And 4 of them are position sized with either 2 or 3 contracts. All right. But also, now keep in mind, it's scalable. Okay. So let's say that you doubled your position size, right, to 2 contracts on the 13, and the other 4, you doubled what it was, right? You'd be averaging about $4,700 a month. Okay. And then if you tripled it, you'd be averaging about 7K per month. Okay. So see what I mean? I mean, it's powerful, right? And it doesn't take a whole lot of equity to run a portfolio like this in an account. So here's the yearly net profit distribution. In fact, last year, this portfolio made a little over 33K, trading just a minimum position size. And again, the drawdown was less than 2,000. Okay. So if you had position size this portfolio based on a larger account size, imagine what that would look like. In fact, guys, some of our clients are doing just that, and they're reaping the benefits. If this looks like something that you would like to learn more about and start scaling your discretionary trading with automated trading, right? And potentially create another stream of income for yourself, then I would encourage you to join us Saturday morning, 10 a.m. Eastern, 9 a.m. Central. Okay. And again, in fact, just for joining us, you get a free robot. So come and spend some time with us. Now, if you're on the fence, I'll be honest with you. Okay. At first, I was skeptical about automated trading systems. Like both Nate and Richard, I'm a discretionary trader. You guys saw my analysis on Monday. But then I started trading a few of the robots in another live account, and I started to see the results, positive results. In fact, results that for the most part actually matched back-tested results. So now I've got a handful of bots that I turn on once a week, check on them every morning, right? Check on them throughout the day. Now, I don't have to, but I do anyways, because I'm here anyways, in front of the computer. And then I check on them again at the end of the trading day, just to make sure that they're flat, unless I've got some swing trading bots, then I'll hold those overnight. It only takes a few minutes each day. I like to say that these bots are my employees. Okay. Keep in mind, not every day is a winner, right? But overall, these portfolios are making money. And so with a portfolio of algo bots like this, guys, you can create for yourself another stream of income that only takes a few minutes each day, if that. Okay. So is there anyone in here that wouldn't mind having another stream of income that only takes a few minutes each day? I'm sure there is a handful in here. And I see you said you cannot because you're traveling. Actually, you can. I don't run these on my computer. I run them on a VPS that I can access from anywhere. I ask There was one afternoon, it was a Friday afternoon. I went out with my family on the boat, and we're in the middle of the lake, and I still had cell service because it was a lake. It wasn't out in the Gulf. And the bots were up like $900 that day. And my cousin's like, why don't you lock in gains? I'm like, well, because this and this and this are saying, hold on to your gains, based on market internals and what, maybe I can, and if Nate lets me come back in here, I can cover some of that, what I look at to determine, hey, let's just hold on to these. So I held on to them, and we're out in the water. And I had to have my daughter show me how to download the app. But then I logged in, and I could access the VPS from the app. Now, I wouldn't suggest really doing anything from the app because it's easier with a laptop, but you can access your VPS literally. All you need is an internet connection. You can access your VPS from anywhere. And that's how we all do it here. That's the best way to do it, because the VPS is always on. It's always connected to the internet, right? So, because the bots will trade overnight. So the VPS is the way to go. I would not encourage you to run it on your local machine. Save your discretionary trading for your local machine. Let the bots run on a VPS. Okay. So I'm going off on a tangent here. Guys, if you're interested in learning more about what we're doing with Robot Lab, about fully automated trading strategies, then join us this Saturday morning at 10 a.m. Eastern, 9 a.m. Central, right? I'll be there answering questions at the end, or helping Christian along with that, and moderating if he needs anything. I'm looking forward to it, and hopefully we'll see you there. So with that said, do you guys have any questions?
Sure thing. Yeah, thank you so much, Craig. As always, we just very much enjoy having you here. And it's always fun to look at these portfolios and see the updates. But yeah, it looks like Clinton did have some questions for us. If you scroll up just a little bit, as well as Harold's got a question for you too.
All right. Yeah, I see. Clinton says, how are these bots different from the 19? What data feed are you using? Well, we've got several different portfolios. So on one VPS, I have Kinetic. I know like Christian will have Kinetic with Kinetic data feed, but he's trading in IB, Interactive Brokers. I also use Continuum. Okay. Log right in to there from the VPS. How are these bots different from the 19? There are similar bots, and we've got some new bots that are coming out. I thought they would be out this week, but they're going to be coming out hopefully next week or the following week. This is actually a really good time, because some of these bots, we've got some new bots that the Robot Lab members haven't seen yet. They trade, I wouldn't even trade them on the micros. They trade on the E-minis and full-size contracts. And they literally risk $50, and they look for anywhere between 150 and $200. They're kind of like scalping bots. So I'm excited about that. You don't really call them that, but that's what I would consider them, because to me, $150 to $200 gain on a regular full size is a scalp to me in this volatility. So, but those are coming out soon. We've got some new bots that trade the currency futures coming out. You got some swing bots, Australian dollar, euro, pound, and from what I understand, we should have some new currency bots coming out on the yen. I haven't seen that yet. I've seen a couple euro bots, a pound, and an Australian dollar, and then these other like scalping. I call them scalping bots. Yeah, so if when you add those to the 17, it's pretty amazing. Like when you add the full size scalping bots to the 17, it's pretty amazing the results you get, because and the risk is minimized. I ran one portfolio. The drawdown was like $700. The max drawdown was $700, like $735 or something like that. And the gains were six figures. So, yeah. And once we release those bots, then I've already started working up some portfolios. Once we release those bots, then, and we're running those on a VPS as well. Once we release those, then I'll be able to share that with everybody. So I'm excited about those new bots coming out. Do you have a 30-day money back guarantee? No, it's not a 30-day. Here's the thing. What if you started trading in February 1st, right? And then you traded this portfolio February 1st, you saw what happened in February, right? You'd be like, okay, I want my money back. But then you miss out on what happened in March, you know, or you get let's say you started trading here, right? At beginning of April or middle of March, right? And then you just see that, hey, you make a little bit of money, and then the next 2 weeks, you know, it just, you have to give it more time. There is a guarantee. Christian will share that. I'm excited about that too, because they've worked the guarantee up such that you could literally do this with no money at risk. How do you do that? Come and find out on Saturday. Okay. So Christian will go into more detail about that. I'm excited about that because it's going to help a lot of folks that are just, you know, are concerned about that. And also, you know, we've worked with people that, especially this past month, they were over leveraged. And they had a portfolio that was too heavily focused on the E-mini, S&P, and NASDAQ. Well, we've worked with some folks and to get them kind of back on track. So, and Christian will tell you, you know, we're not here to just kind of, hey, here's a portfolio, have a nice day, good luck. You know, we're here to help. Okay, so, all right. So yeah, well, Clinton, come and join us on Saturday to learn more about it. All right. Jackie, was the $700 drawdown one of the pre-made bot programs? No, not yet. Those bots haven't been released yet. So that's what I'm saying. I'm excited about these new bots that are coming out. In fact, I had to I asked Christian, is this real? I mean, is this too good to be true? And so we started running them, and sure enough, the real-time results are matching back test results, you know, for the most part. I mean, there were a couple of discrepancies, but it's minimal. Still, it was $50 stop loss, right? So that's it. So yeah, I'm really excited about those. And I'm anxious to get those released so we can start building portfolios, more portfolios around those, and go forward with that. So yeah. So Ganesh, so you guys configure bots and guide us which bots to choose for account size. We have live classes, and Christian can explain more on Saturday. But yes, we have, and you weren't you in the last master class? Your name looks familiar. Yeah, we have live classes, and yes, we do. We're able to help and guide, and we have some pre-made bot portfolios, and I'm building more portfolios as we speak. Actually, I did one this morning, so and set it up on one of our clients' VPS. So, and he's excited about it. So it's about 30 bots, and it's a 30 bot portfolio. The drawdown is only 1,500. So it's a swing bot portfolio. It only has like 3 or 4 E-mini S&P, I think 2 or 3 NASDAQ, and the rest are gold and crude and currency pairs. So, but yeah, it's really diversified. And that's the key to minimizing drawdowns, is that diversification and low correlation, everything I talked about. So you're active with the 19. Okay, well, when the new bots come out, we'll join you in the live backtest session. And then I'm sure you're going to want to add some of those newer bots to your to 19 or even tweak your 19. Maybe replace some of those bots in there with the new ones. So do you guys have any other questions for me? If no, all good.
I think
All right.
they're pining for the for our terrible pun / dad joke of the day.
Oh, I hope you have one because I don't have one
I
today.
came
wasn't
prepared, my friend. I'm always armed and ready.
Oh dear.
good.
But yes, we thank you so much, Craig, for that presentation. It's great to see, as I mentioned, seeing the updates on the portfolio, hearing a bit about some of the new ones. And we do want to leave some more room here. We've got a couple more minutes. We do have to ship out before the top of the hour, but we do want to leave some room for questions. And it actually looks like Craig Sanjay had one more question for you too. Which portfolio is this one?
Yeah, hey Sanjay. I had the fortunate opportunity to meet Sanjay in Jacksonville a few months back. So,
Awesome. Another Floridian then.
huh?
A fellow Floridian then.
No, he came to visit.
Ah, okay, understood.
I think are you in Ohio or Pennsylvania or something? I can't remember, Sanjay. Anyways, this is a 17 bot. We talked about it in the live backtest session.
Excellent.
Virginia.
There you go. Yep.
Yeah.
I knew it was up there somewhere.
Perfect. Well, thank you so much again, Craig. And thank you, Richard, of course, as always, for the analysis, our
All right,
levels to
thank you.
lock.
Thanks, Craig.
We'll go ahead and just give you guys one more second or two here. Just fire away in the chat if you have any questions for Richard or for Craig. We will, of course, be back on Monday next week. Just a reminder, and for some of those of you who may be new to these sessions, we are live 3 days a week for Profits at Noon. That's Mondays, Wednesdays, and Thursdays at noon Eastern. So we have some surprises in store for you next week. We'll have a special guest next Wednesday. All that is coming your way. So be sure to join us on Monday. We'll start the week on the right foot with you, give you all of the levels that we're stalking, and give you a preview of what we have going on that week. Thank you, Hal. You have a great weekend too.
You too, Al. Everyone, thank
Yeah.
you.
Excellent.
Thanks, guys. Have a good weekend.
Yeah, and one more shout out to our YouTube crew. If you're over there watching the simulcast, I do encourage you to join us here in the VIP sessions within Zoom. You'll unlock the bottle service, table service. I digress, but please check out that link, join us here in Zoom. And then now this just leaves us, I suppose, with our terrible joke. So I'll go ahead and I'll put this into the chat as well, because sometimes these puns, seeing it spelled out does help. So Craig, Richard, are you ready?
We are ready.
As ready as you can be. So it's here in the chat. How do you throw a space party?
Yeah.
I got to get some Jeopardy music queued
How
up
do
for
you
this.
throw? Yeah, I was just thinking the same thing. How do you throw a space party?
No idea.
Last chance to anybody in the audience as well.
As soon as you say it, we're going to be like, "Oh, you got
Yeah.
to be kidding."
Richard
Yeah.
hit me with one right before the session. That was,
Throw a space.
I was taken
We'll
aback.
keep that for next week.
So you've heard it here
Oh my
first. How do you throw a
gosh.
space party? You plan it.
Oh my gosh.
No, that's terrible. No.
It's truly terrible. It's awful, and I do
Oh my
apologize.
goodness.
Uh,
Yeah.
Fantastic. Well, I'm sitting on a pile of some good ones, so I'm loaded up. Yes, Eugene, dad
Awesome.
jokes. So
I'm dad jokes.
I'm loaded for the next few sessions. So as always, you'll have that to look forward to. But again, thank you everyone so much. Thank you, Craig. Thank you, Richard. Thank you to everyone in the audience for joining us. And we do look forward to seeing you again next week on Monday. We'll be back for Profits at noon Eastern, ideally with some updates coming your way on our newsletter as well. But yeah, in the meantime, everybody have a great weekend, and we'll see you all again soon.
Awesome. Take care, everyone. See you on Monday.
See you guys. Have a good weekend.
Bye, Nate. Cheers, Craig.
Thanks, guys. See you, Richard.
Bye.
Bye-bye.